Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about trading butterflies, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy guys.
I'm getting more comfortable with the butterfly on the call side, but I'm not comfortable with it on the put side. Would you mind working through or at least showing us an example of putting a put in? Because I figure with the volatility and that's potentially coming in the market, I'll need to know how to really do that and know how it works.
What is it about the put side that is making you uncomfortable?
The fact that I don't know what I need to do in order to say, okay, I think the market is going down. I'd like to make sure that I have a put in.
All right. So right now we're choosing call flies because we think that the trend is up. And why do we think the trend's up? What do we use as an indicator, or how do you determine that this trend's up other than me saying, hey, the trend's up?
The VIX and just watching the market, just doing my charting and just saying,
hey, okay, so you need a more definitive way to give you a signal as to whether or not to put on a put or a call. I guess that's the issue, because actually putting on a put fly is exactly the same as putting on a call fly. It's just a matter of...
You said that over and over, but I would tell you that at least as a new student, I have no clue about what you mean by that. They're the same. So oh, good. Well,
what do you use as a lot? What do you use as a trading platform?
Just Thinkorswim.
Okay, so let's bring up Thinkorswim, and I'm going to open up the E-mini only because the SPX isn't open right now. We'll look at the options chain, but before we do that, the first thing that we do when we're trying to determine direction is use like a moving average, something simple, and it has to be the same kind of moving average all the time. So once you've chosen a way to determine direction, stick with it. Don't keep on jumping around and saying, I think it's turning this way, and then try to alter something and try to install your own genius in there, because that's not going to work. It's not going to work in the long run. You might get lucky every once in a while. Ideally, what you're trying to do is you're trying to get to be about what the market gives you, about 50% on whether or not you choose direction correctly. Trying to get much better than that. Some people think that they have a magical formula, and that's great. Go for it. But I just suggest using a moving average. And what I use is the Hull moving average. Did you pick up TradingView? Do you have TradingView as your charting program?
I have not yet. I've watched you use it and that, and I keep thinking I will at some point, but no, I have not at this present time.
I would say that in this program, it's indispensable. So what I would suggest is that you go to TradingView and get a trial, and then sign up for the monthly. And then in late October, I think on Black Friday, they're going to have a sale. And that sale is usually like 50 or 75% off. I'm sure there is some people here that have taken advantage of that. Yeah, just wait for that sale and then buy a yearly subscription.
Okay.
All right. But you're going to need it in order to do a good portion of what we do in our setups. You need to know where the market structure is so that you can know exactly where you're going to enter a trade every morning. So what I would suggest is that you just follow along with what I'm doing every morning. And I talk about it every morning. I provide what I call a situational analysis. I say which way the market's going, where's the volatility and the energies that are coming in, so we can determine the width of the flies that we're going to use. So we know direction and we know how big of a fly we're going to put on. Then I also show the volume profile, which is what we get from TradingView, and where those levels are. We mark up the volume profile so that we can see where the market is likely to pull back after it opens. The whole concept is that markets don't go straight up or straight down in a trend. They tend to go like a saw, right? And when they pull back, they're typically pulling back to what's called a structural level, which is what we're looking for in the volume profile. So every morning we're trying to capture these pullbacks, whether it's a pullback going up or a pullback going down, at that structural level. So that's why you need TradingView, so that you can build that out for yourself. But the very first thing you need to do is just come up with some rudimentary way of telling direction. And I always use a daily chart. So that's the very first thing. So in other words, I set the time frame to daily. This is messy, so I'll choose the SPX here. So here's the SPX. It's on a day time frame. And what I've chosen to use is the Hull moving average. And on TradingView, it's called the Hull Suite. And the only reason why I chose it is, well, first of all, the Hull moving average tends to be a little bit faster than just a simple moving average, but it's a pretty good moving average. But the other reason I chose it, it has this big wide band. So it's super easy to see which way the market's going. So it's very clear that when it's got a blue line, it's going up and when it's got a magenta line or whatever color scheme I choose. When it's got a magenta line in my color scheme, it's going down. So if it's going down, that's where I would use a put and I would use a call when it's going up. Is that simple enough?
Yes.
So the process every day, it's like a routine. We go through the same exact routine every day. In the morning, your routine is really to do that situational analysis. Which way is the market going? How much volatility do we have? That tells you your direction and how big of a fly that you're going to use, and also what kind of fly, put or call, whatever. And then the structural analysis gives you your actual entry points. So let me demonstrate that. So this is a chart that's already had a structural analysis done on it. And I've created these horizontal lines. You can see I've created all these horizontal lines. There's a lot of them. Don't get too nervous about that. But all they do is they're outlining or overlapping the extreme changes from volume to no volume on the volume profile. That's why we need TradingView to get this volume profile. And the reason why we want TradingView is that it is by far the best and most adaptable or easiest to use and most accurate volume profile indicator that I've ever found. But anyways, we get volume profile so that we can see where the market has laid down value or no value. That's where you see nodes are where there's been value and lack of nodes is where there's been no value. And that shows you that transition from high volume to low volume is showing you how the market feels about those levels. And those levels, those where it goes from high volume to low volume, are natural support and resistance lines. That's why we want to use them. And so when we zoom in on a day, now you can see a whole bunch of vertical lines. You see these vertical lines? What those are, each one of those is marking off a time frame in a trading day. And it's the morning session between 9:30 and 11:30. I guess you could argue we could go to 12:30 if you wanted to make that the whole morning session. I just have it for 11:30. And so what we're looking for is something to happen within that time frame. And if it does, we take a trade. If it doesn't, we don't take a trade. Now, it just so happens that last week, I think there were only 2 instances where we took trade, 2 out of the 5. Is that right? Or was it 1 out of the 5? I'm not sure. So let's take a look at it. So here we are zoomed in, and so we can see each day. Once we're zoomed in and once we've marked it up, we really don't need the volume profile anymore. We can just hide it like that. And this is Friday right here, Thursday, Wednesday, Tuesday, and Monday. So it's all week. So the markets do this when they're going up. Now they go up, they pull back to one of these levels, they go up, they pull back, etc. Basically how they move as they're going up. So we're waiting for one of those pullbacks, but we're waiting for it within that time frame because that's where you have the most volatility during the day, and that's where you're going to get your best entry. So it's a conditional kind of filtering out only the best possible times and situations each day. Does this make sense so far?
It does. Take a look at Thursday and tell me when, and I know maybe it was Thursday that you didn't want to go into the market. That Thursday on that pullback, it looks like it was outside your time frame.
Yeah, it never really pulled back to that level right there. You see where I'm pointing?
Yeah, I do.
And I think it was close. And I suppose if you really wanted to get into a trade, you could convince yourself to take it there. But from my point of view, it really wasn't a pullback. However, later in the day, it did pull all the way back here, but it was outside of our level and then shot right up. So I suppose if you really wanted to get into a trade, you could have said, it's outside my time frame and I'll take that because it looks like a move. But you never would have really known. If it were Thursday and you saw this big pullback here and then it started to move up, I don't know how many people would say, yeah, that looks like a great opportunity. I wouldn't, but maybe some people would. The only real trading opportunity that I saw was on Tuesday, right here. Now, previous weeks, like last week, the week before rather, I think we had 4 or 5 days that it pulled back to levels. So this is an unusual occurrence that we only have 1 out of 5 days. Super unusual. And I think it's mostly because we're in this holding pattern, grinding sideways. But that's what we're looking for. We're looking for those pullbacks to those structural levels, and then we take our trade. So right now it's a call fly. Yeah. But if we were going the other way, then we'd be looking for it to come up to these levels. And then
give me an example of how I'll know when we're into that. And I know I can do it from the morning discussion, because I'm sure if we get to that place, you'll probably point it out clearly. But what would we be looking for if we go, hey, this is a time to start doing puts?
Yeah, sure. If we look here, we can go back to this period here. Oh, this is good right here. All right. So here's a day and it pulls back to here, right here. All right. So if this happened and then it started moving down through it, I would have taken a put call right here.
Okay. Hey, Ernie, how are you picking your entry points on your lines? Is there anything, trying to understand how you're doing that?
I'm not picking entry points. I am going strictly by, here's another, almost the exact same trade.
Yeah.
It looked that day. So it just pulled back and then you would just go short, take a put call, a put fly right there. Now it may not have paid a lot. They look like small wins, but that would have been, it's a 30-point move. So it probably made halfway decent money. Now this one happened right at the market open. I remember that day, happened right there. So here are 3 days, 3 objective entries. 1, 2, these 2 would have been small wins. This one looks like it would have been a major win.
Okay.
Is that clear?
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.